Sure. Look, as all our investors know, our head office here for Marula is in Nairobi. It's in Kenya. And it's important for us as we move ahead with our stock exchange listing, our dual listing on the NSE later this month, that we have more than just an administrative presence. We've been looking at a number of project opportunities over the past few years here in Kenya. And manganese is clearly a commodity we like. It's one which is a critical metal. It is a battery metal. And Kenya has been blessed with some very good deposits. And it's been also been blessed in that a number of these have already been developed into small-scale mining operations. So for us, when we were looking at opportunities, we needed to find something that was advanced, that was permitted, and where they'd effectively de-risked a lot of the investment proposal. So the fact that they had been operating on and off over the past 12 years, so they had a fair bit of knowledge about what they had, and it gave us an opportunity to get in there and see it, and basically complete quite a fast track but very detailed due diligence. That due diligence covered Gems and Industrial Minerals, the company that held the license, that holds the license, and that have been conducting activities there for this period of time. So we met with them on multiple occasions here in Nairobi. We hit it off. Very good, very pro-business, very pro-investment, and they want to get value for that asset. So they're very keen to work with us, and likewise us to work with them. So a very good group, very experienced as well, and ones that we're keen to learn from here in Kenya too. No, look, we announced that as part of our due diligence, we took a series of samples. Those samples we gave to an international commodities trading group that actually have an office here in Nairobi too. That's Fujax out of the UK. They operate one of the port facilities at Mombasa, a dedicated minerals port, where they are already exporting manganese. So they did some assays of that material for us independently, and it came out over 37% manganese. Now 37% is that benchmark medium grade product which is traditionally coming out of South Africa, out of the Northern Cape, where some of the world's largest mines operate in the manganese sector. So those results were very positive for us and confirmed what we saw. You know, as part of our due diligence, myself, Collins, our exploration manager here in East Africa, Edu Oheni, our general manager of operations here in East Africa, and a number of other parties went out on site, and we spent a fair bit of time looking at the open pits. Remember, there's 3 open pits that extend for over 600 meters. We were able to see them, we were able to inspect the ore, not just in the pits, but stockpiles. Stockpiles are between 3,000 and 5,000 tons, so you could see the material. You're also able to see a number of parallel veins there, which is very encouraging for us. And you could see the structure on the landscape, which strikes for over 5 kilometers in length. So potentially, a big expansion plans on the cards for us as we get more involved. But the due diligence ticked all the boxes from a technical point of view, legally as well, in regards to the license, which is valid, 2 licenses, and which we've asked that Gems and Industrial Minerals also proceed now and extend that license further so we can really start making some major investment here. Sure, we announced in the RNS, which went out on Friday, that we would be making investment of about $1.5 million, as you mentioned there. That's going into new processing equipment, so brand new jaw crusher, conveyors and screens, basically to process the product. But in addition to that, new mining equipment as well. New ADTs, new loaders, new excavators, all of which we feel will have a major impact in terms of the efficiency of that operation, the cost profile of that operation, and also the production rates that it's going to produce at. I had the pleasure or the opportunity in South Africa last week to meet with several parties about securing that equipment under leasing arrangements. We position ourselves really well in South Africa now, given the relationship with Q Global. There are a number of groups that actually want to support us in our business, independently of Q Global. We clearly have the lines and limits available with Q to basically fund that equipment, but we now have alternatives should we wish to go there. And at the end of the day, it's about securing this equipment on the most attractive terms. So we're aiming, and from my discussions in South Africa, to have all of that equipment up on site by mid-April. Now, that doesn't mean everything stops now for the next 6 weeks, far from it. There's going to be a lot of activities up there using the existing equipment, but also getting us up to speed in terms of our mining plans, our geological and exploration plans, and so on. So a lot of work to happen whilst that equipment is then finalised and delivered here to Kenya. Sure, look, we've got to finalise those agreements. That's quite critical, but the term sheet, that binding term sheet that we signed was very thorough, very detailed. So finalising that documentation is going to be very, very quick, and it should be completed over the course of this week. So that's positive. Our immediate focus really is with the exploration team. So they will be up there this week and starting their work. And that's really to give us a bigger understanding about the bigger picture there. We know what's ahead of us over the next 12, 24, 36 months. We're looking at the potential to go well beyond that. In addition to that, the community engagement, which is massive, critical for us. So that's a key area where we will be strengthening the Marula team here in Kenya, and where we really need to make sure that we conduct ourselves up there in the right way with the communities. Obviously, their expectations, given the announcement that was put out, have no doubt been raised. We need to meet those expectations, and we need to work with those communities here. So that's a big focus of mine. It's one of the big things which I try to focus on with all our activities here in East Africa. But it's that, and the equipment sourcing, the financing around it. It's a number of balls to have up in the air at one time. But for us, this manganese mine here in Kenya will be a game changer for us, with our perception in the industry here, with our perception in government because of the investment that we're making, and for others that are looking to expand their operations. So I think they will see us move quickly here, and I think hopefully in the coming 2024 we'll be a preferred partner of choice to many other similar local companies here that are looking to grow their business in the mining sector. It's a numbers game, plain and simple. Look, we've looked at the numbers here, and we've looked at historically how the mine's operated. Its total cost came to about $77 a tonne. This material should be going for $145 to $150 a tonne, so very strong margins there. Before you start incorporating some of the impacts of the new equipment, the better mining plan, geological understanding that will have to the cost profile. So we believe this can be a very good asset for us. So our decision to go from 60 to 70 is numbers. It doesn't make sense. If all of a sudden we're able to prove up a plus 10-year mine life, where you're making $500,000 a month, to pay a million pound, whether it's in cash or shares, to increase your holding by 10%, to increase your holding from 60% to 70%, effectively what, a 15% increase, 25% increase in your holding. Very significant. So if the numbers stack up, we'll make that decision. We've got a 12-month period to make that decision in. So let's see what happens over the course of this year and see how quickly we move with that. Look, Marula's that battery metals company. So we've got the lithium, we've got the graphite, we've got the copper. We're slowly ticking off a couple of those other commodities. Manganese is one. And unashamedly, it's an easy one for us here in Kenya. You've got such amazing infrastructure, the roads, the rail, the port, Mombasa Port, which goes straight through into the Asian and European markets. Fantastic location. And with Fujax, who are potentially coming on board there as our offtake partners, they've got their own dedicated minerals terminal. So, that to me, it allows us to move very quickly under our strategy of delivering another cash flow stream to the business. And also, like I say, put us into a position of being hopefully that preferred partner of choice here in East Africa, and that'll extend obviously through Southern and Central Africa as we pick up more assets. But it's 100% aligned with what we want to do, and I believe we will we'll mirror what we did at Blesberg in terms of getting this thing moving very quickly. I've got to make sure this time though we do those before and after photos a bit better, because I think there's going to be quite a transformation up there. Will impact very positively on the communities in terms of employment, in terms of engagement, some of the services that we'll continue to use to grow that mine, will be highly dependent upon what can be provided from the local centres there. So, I think this Larisoro manganese mine is going to be quite something for us, and just fulfills our goals, our objectives, our strategies here in East Africa. Look, it's again, we move fast. Kenya's better known for its marathon runners as opposed to its sprinters, but I think we're moving pretty fast here. So the manganese really allows us to get the first one under the way. We've applied for graphite licenses, so we've done our reviews, we've done our homework. Kenya used to be the home to a number of operating graphite mines. Decades ago. The geology's still there, the deposits are still there. So hopefully we can secure them over the coming weeks, months. That'll be something very attractive for us here. We've gone out there, we've seen copper, we've seen lithium. Kenya's not known for its natural resources, mineral resources. And we're neighbouring Tanzania, which has got some of the most incredible world-class mineral deposits. There's some here too, and we see them. So that battery metal sector will be looking to build quite significantly here in Kenya to match what we've got in Tanzania as well. So a busy few months, busy 2024. For investors, I put out a comment on social media calling it Mad March. I think it's going to be mad for all the best reasons. We've already started off quite well here with the manganese. There's plenty of news to come out on our lithium out of South Africa, the copper and graphite in Tanzania, and a few other added extras thrown into boot. So for investors looking at us, there's a lot of people that have done a lot of kind of analysis, which I love to see shareholders do. The fact that they do this work, they go out there, they do the research, and it comes back positive. It makes me realize that we're doing quite a good job here. But for investors to look at what we're doing, from a corporate point of view, you've got a number of new listings taking place for Marula in London to the main board, here in Nairobi onto the NSE, and also into the South African markets as well. So we're going to be quite a growth-focused company, and having access to those three key markets, I think is really going to set us apart from our competitors, our peers, and hopefully start to translate into bigger returns for everybody, not just through the share price, but later in the year, going into 2025, in being able to distribute some of the profits out of our operations back to shareholders.